Hi everyone, I'm Emily. Welcome back to Outperform, where we break down the US markets with clarity and speed. Today's episode covers market consolidation, a key technical setup, and two heavyweight headlines on tariffs that could reshape short-term sentiment. Let's jump in. The four major indexes closed mostly flat today, with only the Dow Jones posting a slight gain of 0.3%. In terms of breadth, the number of advancing and declining stocks was nearly equal, suggesting that overall market sentiment has stabilized. The sentiment index edged up from 60 to 62, a slight improvement. We won't go into the detailed index levels here. You can reference them on the chart. In yesterday's video, we highlighted a large bearish candle in the final hour of trading, which happened to be the first bar of a remark sell setup, the classic bar 1 in the countdown. This morning, as expected, the market opened weak and extended yesterday's pullback during the first few hours. As you can see from the chart, the second bar represents the first hour of today's session, where prices continued to fall. It wasn't until after the fourth hour that the market stabilized and began to rebound modestly. Switching to the daily time frame, the index once again touched the 200-day moving average but failed to hold above it. It ultimately closed between the 200-day and 5-day moving averages. While the 5, 10, and 20-day moving averages remain in bullish alignment, the 5-day has clearly started to turn downward, something worth watching closely. Additionally, today's closing price was higher than the close from 4 days ago. Specifically, the candle marked with a 9 in the remark sequence. That means today qualifies as a high 1. If next Monday's close ends above the bar labeled 11, we'll have a high 2, which would be a more constructive signal. Now looking at the 4-hour chart. We've identified a classic MACD bearish divergence. Price made a new high, but the MACD peak failed to follow, often a sign of weakening momentum and potential correction. That said, this pattern doesn't guarantee a pullback. We saw similar MACD divergences in September and October last year, but the market held up just fine. In my view, if there are no surprises from the news cycle, this MACD top could lead to a modest dip. But if there's a positive catalyst, like unexpected policy easing or bullish earnings, the divergence might get absorbed or invalidated. After all, U.S. markets lately have been heavily headline-driven. And speaking of headlines, today's two biggest stories both center on one word: tariffs. First, President Trump surprised the markets by saying that an 80% tariff on Chinese goods seems reasonable. That comment sparked hopes of a softening tone ahead of this weekend's U.S.-China trade negotiations. Coming from someone who previously called for tariffs over 100%, this abrupt shift raises questions. Is Trump backing down? Just as traders began to relax, the White House press secretary stepped in to clarify. She said the 80% figure was merely an offhand remark, not official policy. She emphasized that the U.S. will not cut tariffs unilaterally without meaningful concessions from China. Meanwhile, the Federal Reserve added its own dose of caution. Chair Powell and several other officials warned that new tariffs could further stoke inflation, putting the Fed in a tight spot. So now we have the White House signaling flexibility and the Fed warning of risk. It was really steering the market narrative. Among mega-cap stocks, Tesla did exactly what we anticipated yesterday, a breakout with strong volume. It looks poised for a solid short-term rally. Other tech leaders stayed flat, leading the broader market to chop sideways overall. This weekend, we'll publish our weekly market outlook and spotlight a few potential breakout stocks. So be sure to subscribe and hit the bell icon so you won't miss what's coming next. Thanks for watching. I'm Emily, and I'll see you in the next one. This content is for informational and educational purposes only and does not constitute investment advice. Trading involves risk. Please make decisions based on your own risk tolerance and financial goals.